Is your bank gonna go under and you're gonna lose all of your money? My name is Brett Tanner and I'm here to show you how to build wealth in a really simple way. The FDIC, there's a lot of talks right now, banks are failing. SVB Bank failed. And they actually failed, people think, because they were investing in startups. And part of that is true, but the actual reason they failed is they had all of their money tied up in 3-year treasury bills. They were not able to sell those to cover the withdrawals that were coming into their bank. So there was essentially a, quote, run on the bank where customers were going into the bank wanting to get their funds. The bank would have needed to sell those treasury bills at a really significant loss. So because of that, the actual bank went under. Is your money safe? There's things you need to understand. The FDIC, how does that coverage actually work? Well, number one, everyone on here should go to the FDIC website and read it. It's really straightforward and simple, but I'm gonna give you a couple things to think about. Number one, every account you have per tax ID number or per EIN. So every tax ID number or every EIN is covered to up to $250,000. So if myself and my wife are both joint owners of an account, that would be 2 taxpayer IDs, we'd have $500,000 in coverage. Now that's per taxpayer ID, per regulated institution. So if my wife and I have $2 million and we want to have it all in a savings account, we're gonna need 4 separate savings accounts at 4 different banks for that to happen. So you need to understand the FDIC insurance coverage. Number one, if you have less than $250,000 and your bank is covered by the FDIC, you're in a great place. If you've got more than $250,000 and you're an individual, you may wanna look at setting up an account at a different bank. That's what I had to do. I had more than that in a single account and I wanted to separate it so I had the coverage. So just make sure you understand your coverage is up to $250,000 per taxpayer and you may need to open up a separate bank account. If you bank at a credit union, the coverage is called the NCU. It functions the exact same as the FDIC. So some banks, if you're carrying a lot of cash and you did not want to set up 4 banks, there are other options for you. They have an option where they can spread out to their sister banks and take your money and get coverage by placing the funds up to $250,000 per account in other institutions that your bank would coordinate that for you on your behalf. Regardless, you need to understand your accounts. You've got to know more. Good news today, there's a lot of banks paying in the 4% for savings account with no risk. And we'll actually include a link to some of those banks in the comments below. So today you might be wondering though, how much savings is enough, right? There's the risk of I don't have enough, and then if I've got too much, and then I'm not covered by the FDIC. The amount of savings you have should actually function off your burn rate. We talk a lot about burn rate, meaning what's the amount of money it actually costs you every single month to live the life you're currently living now. Doesn't mean what could you live if you cut all your expenses and had lived cheap for cheap's sake and only ate beans and rice. Yes, of course you could spend less money. But we want to figure out what's the amount of money you're currently naturally spending every single month in your life. And I'll just pretend that that's $10,000 per month. The first thing I would want to do is I'd want to get 6 months savings. So 6 months of my burn rate, so 6 times 10,000 is $60,000. That would be my first goal. The next goal would be to get that to 12 months. Now here's the interesting thing about personal finance is it's very personal. For most people, if they have 12 months reserves, I mean if they did not work for 12 months and they had that money set aside, that gives them great comfort. However, for you, if you go to bed at night and you're not comfortable, that $120,000 doesn't allow your head to hit the pillow, then go ahead and raise that number to 18 months. But there's a certain amount of money you need in savings. Once you've established your savings, you've got the FDIC insurance coverage, now's the really fun part. Now we go out and look for great investments. We've got a ton of free tools and training and things I invest in, which we share with you. But go out and once you've got your savings number, we're figuring out our investment strategy. We're going out and deploy money to get a return. The ultimate goal to create massive cash flow to get you to live the life that you ultimately want. Click the link below and we'll share with you some more information on your FDIC insurance coverage.